Hey traders and investors, it's Serge Berger here. Today we have to look at the gold mining stocks and gold itself. Obviously, real sharp rally year to date, and I do think that trend's going to continue, I might add, but it's the rate of change here that's once again getting out of hand as it so often does, particularly with the gold miners when they get chased higher or lower because of momentum players that want to get involved in the action. So first of all, what I've done here is in the blue line is the GLD, so representing gold, and the candlestick chart here is the GDX, the gold miners. You can see they have more or less moved up and down together in tandem. The only difference is that the gold has rallied something like 20% or so year to date, while the GDX has rallied like 85%. So you'd expect, some sort of outperformance by the gold miners, but I think it's certainly been overdone. And if I look at some of the hedge fund positioning that I follow and some of the colleagues I speak with, I think a lot of folks here are definitely chasing this, and it's getting very, very, very steep. So let's look at this a couple of ways. First of all, the GDX, you can see just by nature of the rally, if we measure this very simply, you can take some previous rallies, whether they're counter trend rallies or whatever. You can take, for example, the last one here in 2012, and I'm just going to duplicate this, and you can see that line roughly the same amount. And you can go back and look at previous rallies. For example, this one here too. They all roughly last at the maximum that amount. There are some that lasted longer, but not before a meaningful pullback, right? And that's, once again, here you can pretty much measure this distance. There's always been a decent pullback, 5 to 10% at least, before the rally continues. But this rally now is basically very, very exhaustive. You can see how far the GDX is above its 200-day moving average. That's this red line down here, and so that's getting quite exhaustive. You can also look at like the 8 and 21-day moving averages. Look how far this index or the GDX gold miners index is above the 21-day moving average. That's this yellow line, getting fairly extended. We can look at something simple. We like to look at the MACD, the moving average convergence divergence, and you can see that is now at levels we last saw in 2012. And that was when we made a significant lower high after the market started dropping. So we're also, from a momentum perspective, seeing potentially some negative divergence where the MACD may be trying to make a lower high here, at least on a maybe weekly closing basis, while of course the price itself is going to rally. So I'm going to keep this very simple. I do think this sets up as a good trade for a mean reversion move. Possibly back into the 21-day moving average. So that's roughly to the 2250 area from this point on. Again, there's obviously multiple ways we can do this. That would represent about a 10%, maybe a little more than the 10% move to the downside. One can sell out of the money call spreads, which is likely what I'm going to do. If one's willing enough to pay up for some premium in the option space, one could buy some put options, or you can just basically short the GDX itself. So that's what I'm looking at here on this Monday. I hope this makes sense, guys. Please give us a like on the YouTube channel. The more likes I get, the much better I move up in the YouTube ranks, and I would really appreciate your help on that. Other than that, I will see you in the next video. Take care.